I want to show you the depreciation functionality in Dynamics 365 Business Central. We'll go through some basic setup and then some more advanced setup. And then finally, we'll calculate depreciation. We'll see how easy that is and the results that you get. We'll take a look at how to set up multiple depreciation books, posting groups associated with those books, and also we'll go through a quick asset acquisition and show how easy it is to populate multiple depreciation books for an asset. So let's get started. This is a fixed asset setup screen. So one screen, it's a simple screen. There's not a whole lot to it, but there's an important part of it, which is assigning the default depreciation book. Here I've got company set up. We'll take a look at this a little later on. The company depreciation book is the one that I use to calculate depreciation and also create general ledger entries for my fixed assets. In my system, I've got three depreciation books set up. I've got the company book that we just talked about, but I also have two additional tax books that I want to use to calculate depreciation for tax reasons. I've got a California income tax book and also a federal income tax book. So there's a couple important things about these tax books. Number one, there's no GL integration. So I've got all those turned off here. You can see that. So any transaction that I do in this book or the federal income tax book, we're not going to create journal ledger entries, which is what you want. You don't want multiple GL entries for the same transaction. And also, I've got this set up as part of the duplication list. The duplication list will come in a little later when we look at how to make this process a little easier. So right now, I've got all my tax books part of the duplication list. Let's compare it to the company tax book. The company tax book, as I said, is generating transactions that will then go to the journal ledger in my system. You can see I've got those turned on. And finally, we'll look at the federal tax book. The GL integration is turned off, which is what I want. So we'll be working with these three depreciation books today. The company depreciation book is my default book. So every time I add an asset, it will automatically be added to that asset with the depreciation book. Let's take a look at the fixed asset posting group. On the left-hand side, I've got the fixed asset class codes. For each class code, I've got a GL account assigned to different types of transactions in the fixed asset system. Now, out of the box, this matrix is a little smaller than this. I had to add these three fields, which is easy to do, to the personalization function. And there are a number of other fields that are also available. So if you need those fields, you can easily add them to the personalization functionality. This is my fixed asset list. I've got a number of assets that I just added. Let's take a look at those. So here's my fixed asset card for this particular asset. Here you can see I've got the depreciation book company set up as the default depreciation book. This again is the one that's going to feed into my general ledger. Right now, I do not have additional depreciation books defined. I've got just this one. So what I want to do is I want to add additional depreciation books to this particular asset. I'm going to add the California income tax book and also the federal income tax book. There are two things I need to do with these tax books. Number one is I need to add those tax books to each asset that I want it to be added to. And then also, as I process transactions, I want to make sure that I process transactions against those books too, if that's indeed what I want. There are a number of ways that I can add tax books to an asset. So first way I can do it manually. I can add it manually. Let's go ahead and do that. This is one of the assets that I recently added in my system. It only has the default book, the company book. I want to add additional books to it. So I'm going to add the California income tax book. Let's do that. This is the posting group I want. And I want the depreciation start date to be the 15th of January. These are 7-year assets for tax reasons. I'm going to do that. I'll also add the US tax book here. Same posting group, same date. Let's take a look at the depreciation method for these books. For my corporate book, my company book, I've got straight line depreciation, which is what I want. For the tax books, I'm going to use double declining balances. So let's change that depreciation method. And for a double declining balance over 7 years, that percentage is 28.6%. So I'm going to put that in here. And also for the federal book. All right, so I've got these books added. So this is one way to do it. I can add them manually, which I just did, but let me show you a better way to do it. I'm going to use this as my template. Let's go back to my depreciation books here. I'll open up the California income tax book, go to actions, functions. I'm going to create the fixed asset depreciation books in that new group of assets. So let's do that. This is the asset that we were just looking at. I added the books manually to this one. I'm going to use this as a template. I'm going to add these books to a subclass that I just set up for lab equipment. Let's specify that here. Let's add the California tax book to the subclass code of assets. Go ahead and do that. And let's go back and do it again for the federal book. There's a US tax book here. I've got the same setup. I'm using this as a template. It's going to go for this subclass code. Let's go ahead and do that. All right, so that's done. Now I've got those books added to the assets. Let's take a look at it. Here's a template. This is the one that we added manually. If I go to the next one here, so I added the California income tax books and the federal income tax books to this particular asset. It's using the proper depreciation method and the depreciation start date and the depreciation number of years and also the double declining balance percentage. This was set up in the previous asset as a template. So you see that here. And later on, we'll look at acquiring an asset and see how we can do this on a more automated basis. So you'll notice on this group of assets that I just added, I now have 3 tax books. I only have book value for the company book. This is when I acquired the asset, it created book value for this particular asset. I still want the book value associated with the California tax book and also the federal tax book. So let's see how we'll do that. Go back to my tax book here, go to actions, functions. And what I want to do is I want to copy the depreciation book entries for each asset from the company depreciation book to the other income tax books. So let's do that. So I'm going to change the date here. I'm just going to do it for this subclass code here, lab equipment. And what I'm looking at is the acquisition cost. This is going to become the book value in these tax books. So let's go ahead and do that. We'll copy these. Now remember, this is not making general ledger entries. It's just making entries in those tax books, the California income tax book and the federal income tax books. So let's go ahead and do that. And come back and do it for the federal book. We can use the same subclass. These are new assets I just added. Again, all I'm adding is acquisition costs. This does not add a general ledger entry. Let's go ahead and do that. So what that process does is it creates a number of fixed asset journal entries. You can see the entries here. I've got the tax books here. This is an acquisition type posting, and you can see the dollar amount. I copied the dollar amount from the company book entry and populated that to the California income tax book and the US tax income book. So now what I need to do is I need to review this. If it's correct, I'll just go ahead and post it, and I'm done. Let's go back and look at those assets. This is one of those assets right here. This is in the lab equipment subgroup. You can see that here. I now have 3 books for this particular asset. I've got the information for depreciation and also the book value here. I can drill down on the book value for this income tax book. And I can see this transaction here. This is the transaction we just posted in the fixed asset journal. If I scroll through here, I can see that it's been properly updated on all these books. So this is exactly what I wanted to do. I wanted to add two tax books to my existing assets. I did that. And then I populated the book value for those tax books based on the company tax book. And again, I did not generate any additional general ledger entries based on those tax books. They're just entries on the tax books themselves. So next, let's take a look at the depreciation calculation. I'll always calculate the depreciation from this screen right here. This one's all set up to go for the company. I've already depreciated assets for January. I'm going to now move this to the end of February. For this demonstration, I'm just going to focus on the lab equipment. So I've got that here. Let's go ahead and run this depreciation. I'm just running it for the company book. This will create general ledger entries. So let's go ahead and do that. It calculated the depreciation for the company book. It also generated fixed asset general ledger entries. Let's take a look at that in the journal. This is going to update the fixed asset system, but also the journal ledger. You can see the transactions here. I basically have two transactions for each asset. I've got the first one is for the fixed asset, then I've got the offsetting entry here on the general ledger. So you can see that here. These are all set up. These are depreciation amounts. This is a monthly amount for the depreciation. I'm going to go ahead and post that. And now I'm going to go back and calculate depreciation for the California income tax book and the federal income tax book. Let's do that. I'm going to specify the same group of assets. I'm going to go ahead and do that. Let's open the fixed asset journal, create all these journal entries. I can go ahead and post that. And I'll go ahead and do the same thing for the federal income tax book. Do that right now. It'll create a new entry. Again, these are just fixed asset entries. I'm going to go ahead and post that. And we're done. So let's go back and look at those assets. So what we've done in the last few minutes here is we've added tax books to these assets. We added the California tax book and the federal tax book. We copied from a template, which was just another asset. We also then added the book value. We can click on that. So we're looking at the California tax book now. We can see that this amount was added as an acquisition cost. It's the basic acquisition cost for this asset. And we just ran the depreciation. We can see the depreciation right there. Same thing for the federal tax book. We did the acquisition, then the depreciation for February. See that right here. Let's look at a quick addition of a new asset. What I want to do is I want to copy this asset to create a new asset. I'm just going to go copy fixed asset. I'm just going to copy this information. Let's go ahead and do that. Here's a new asset that was added to my system. It was a copy of an existing asset. You can see I've got all the basic information about the asset here. What I don't have is I don't have book values for this. I do, however, have all three depreciation books. That's nice. It makes it a little simpler for me. So I've got that and I want those books. If I did not want the tax books on this particular asset, I could easily just delete it here. But I want this. So what I need to do now is I need to acquire this asset. This asset has not been acquired. You can tell that by this is lit up and the acquire toggle has not been switched. So what I want to do is a simple acquisition. I'm going to acquire it here. I'm going to use a fixed asset clearing account, record this. I'm going to put the costs in here and hit next. And this is going to create a general ledger entry. So let's open that up. So what I want to do is I'm going to add this asset, the fixed asset. I'm going to create a general ledger entry from this transaction that shows that. And what I want to do is I'm going to mark this use duplication list. What this should do is it should duplicate this entry across those two tax books, the California tax book and the federal tax book. What I'm also going to do is I'm going to add the insurance to this particular asset. So I'm going to add this field into the screen. And now I've got that screen here. I'm done with the personalization. I'm going to specify the insurance policy that I want this added to. There it is right there. I'm going to use the duplication list again to add this information to the two tax books. And I'm ready to post it. That will post the asset to the company book. and it will create these transactions for the two tax books. See, I've got the acquisition transaction right here and the dollar amount. So I'm going to go ahead and post that. If I look at this asset, I've got everything I need. I copied this asset from an existing asset. I copied over the information about the asset, but then I went ahead and I acquired that asset. I specified that I want to use the duplication list. Those transactions went to the two tax books I have. You can see the information right here. If I drill down on the company book, we've got the acquisition cost right here. But because I use the duplication list, I also have it in these two tax books. You can see that right here. So that was a look at the fixed asset depreciation in Dynamics 365 Business Central. Specifically, we looked at how to handle multiple books for fixed assets. We looked at the company book and then two income tax books. There's a little extra effort to get the income tax books set up. Most people just use the company books to make sure that the journal ledger entries are generated from fixed assets. But if you want to also track the income tax books, you can do that in Business Central, and it's relatively easy to do.
If you're ready to deploy Copilot in Microsoft 365, download our free guide with the link in our video description.